JB Cycles here with another video on the anatomy of bear markets. So this is a follow-up to my previous video today, and well, I want to go a little bit in depth, and I have changed my mind a bit here. Instead of showing what was supposed to happen, we should focus on what actually happened. So this cycle low in 2018, 19, that was a one wave bear market, and this one in 1994, 95. That should be regarded as a two wave. And let's see, I think I changed some more. It was the this one. Well, you know, the lowest low is this low. I try to argue that the bear market or the cycle low continued to this secondary low, but you know, the lowest low is this one, and then it becomes a two-wave bear market. So what does that show us? Well, here I have plotted these bear markets. Not all of these follow every definition of a bear market, you know, like a 20% drop and so on. Many of these do not have 20% downside, but they all correspond to a 3.5-year cycle low. So going back to 1937, well, here we see that until 1980, in general, these cycle lows they did have some duration. Mostly 3 waves, 4, 5, but then something happened starting from the 1980s. Here you see almost every cycle low is just a 1 or 2 wave bear market, very short. And then you have the long one in 2000, 2007, and then we had the previous bear market. Oh wow, that was a long bear market of 3 waves, but you know, that's also a short bear market. So here I have plotted the waves and the months. So there's some overlap. There are a few cases that are, you know, hard to define. Well, I don't think they are hard to define. There's an explanation why they can almost overlap here. But anyway, I want to show you these. No, I'm not showing you the 1 and 2 wave bear markets, but the longer ones. And I start on 1948. So this is a 4 wave. So the yellow one is the average. Here I have a 17-week wave just to show you, and the black one is the actual one. Now often we see that the market, because also like the situation this year and last year, we do have the 17-week cycle, but you do not always see it that clearly, because I think the market is rather following a 10-week oscillation, and this 10-week oscillation has to adjust to the cycles. Sometimes you see the cycle, but sometimes they are not that clear. Anyway, often you see also that in the beginning the bear market do not quite follow the cycle or this 17-week wave, but after a while they find the right rhythm. But I think we can see here 1, 2, 3, 4. Then we have 1953. We have in black 1, 2, 3. So you know, you could almost maybe see the 10-week oscillation here, like 1, 2, 3, maybe 4 or 5. I haven't checked, but yeah. But here we'll look at the 17-week cycle. So we have 1956. 1, 2, this one you hardly see, 3 and 4, and often we see, you know, this last drop that kind of shouldn't have been there. You see that many times, but here's the 4th one, and you could call that a bear trap that shouldn't have been there. 1959, 1, 2, 3, or 3 and 4. And then we have 1966, 3 waves, kind of difficult to see. 1, 2, and 3 maybe. It was not ideal, but yeah, it's kind of following the average scenario. So we have 1968, 5 waves. This one is also a bit tricky. From here on, it follows the wave, but here, up here, you have 1, 2, or 3 maybe, and then 4 and 5. 1973. Here in the beginning, you cannot see the waves clearly. You have 1, 2, 3, and 4, and here, it should have stopped around here, but this one just extended and went on and couldn't stop. 5, and I had said this is a 5 or 6, because you can argue maybe it went all the way to this one. 6. Then we have 1977, 4 waves. So again, a bit often they are a bit messy in the beginning. 1, 2, 3, 4. And then we have 1980 with 5 waves. Also, the wave, 17-week wave, is a bit hidden. No, I should say it's a 17-week cycle. But yeah, here I call it a wave. 1, 2, 3, 4, 5. And here you see that the last drop that shouldn't have been there. And then we have 1983, 1, 2, 3, and yeah, year 2000. Here we have 7 waves, and a bit messy to begin with. 1, where is it? 1, 2, is it here? 2, and 3, and 4, and 5, and 6, or maybe it's here. It's 6, 7. And you could almost argue it's 8 waves, but no, this is a higher low, 7. So, although the cycle always is present, it's also often disguised or messed up, but it always returns. 2007, 1, 2, 3, 4, 5 waves, beautiful. 2022, oh gosh, that was a long bear market. 1, 2, 3. So, again, I cannot say for certain what will happen with this one. We should at least come down to the 3.5-year average in green. That's around the 200-week moving average. And I strongly suspect that it is time for maybe a 5-wave bear market. You can see here you have the 28-year cycle low, and here you have a 28-year cycle low, and this 28-year cycle was very what's the word? It was not a normal cycle. It should have been a financial crisis cycle, but then it became a war cycle. Well, you had a depression in the 1930s, so it was the financial crisis came much earlier than expected, and the big war that should have been in the 1970s became the Second World War. So here it was all messed up, but you could say that, okay, 28-year cycle, 28-year, 28-year, and now we have the next 28-year cycle low coming up, where we should have a couple of long bear markets of around 5 waves or more. And this we are in currently now, this bear market, yeah, it could very well be a 5-wave bear market into next summer. Could something bullish happen here? What if we rally all the way up to all-time high? Well, you have 2 alternatives. Alternative 1, this was all we got. The market is very bullish. That was the bear market low, and now we have to look for the next top in 2028 or 2029. Or, more likely, should we rally all the way to the top, it's a big topping formation, and the bear market is still to come, and it could still be a 5-wave bear market. So, but right now we are caught within a downtrend, and I don't think we will escape it. Bye bye.